Hi, welcome to this week's market update with Morton Brown Family Wealth. I am your sole hostess for today, Katie Brown, and I thank you for joining me. So, today I want to talk about three things. The first one being the status of the tech market and how that continues to drive our indexes. Secondly, a consumer price index. How has that been faring and how is it growing or slowing down? And then finally, data breaches. I want to touch base on where we are in this business world with data breaches. First, I'd like to start with an article that I found in Barron's. It's "The Tech Stock Rally is Getting Scary." It is interesting. So in this article, they talk about how the heavy tech index, the NASDAQ, is up 18%. At this point, it's up about 15%. But still, we have this huge rally within these large tech companies primarily, which kind of makes sense because it's made up of a lot of companies that can not only survive in this environment, but can really thrive and grow in this environment. But the level of growth is huge. So, Chris Harvey from Wells Fargo, a strategist at Wells Fargo, was noted in the article. And he had referenced that when he rebalanced the Russell 1000 growth index, he had to increase the weighting for Apple, Microsoft, and Amazon. Prior to this rebalance, they accounted for about 25% of the index, and that bumped up to 28% of the index. So to have three companies making up 28% of a 1,000 company index is pretty huge. But I think the thing that's really interesting is that it's not only that that's a large piece of the index, but he has to go in there and do a lot of buying. And so do all the other indexes out there that own those companies. So just doing a quick cross reference, there are 283 ETFs or ETF indexes that own Apple. So all 283 of those, plus all of the mutual fund indexes that own Apple as well, they all had to go in and buy even more of Apple. And that's just Apple. There's over 250 indexes that own Amazon. And so all of these fund managers that have to go in and buy, they're feeding into that cycle of growth. And I just think that's kind of fascinating to keep in mind when we see these large companies getting larger. Some of it is because managers are forced to purchase them to keep up with the pace of their growth. But the article also kind of pointed out, some concerns for the level of growth. So even though these companies are thriving in this environment, there's concern about their ability to continue to grow at this pace and becoming overvalued and getting too expensive and too crowded. And then we have people like Bill Gross saying, you know what, it's time to switch over to value. Growth has had their heyday. And from our perspective, we want to make sure to have both. I know last time we talked a lot about growth versus value, and we still continue to believe that it's important to have exposure to both, but also to know when we crack open the investments we have, how much exposure do we have to the individual companies. So we just want to be cognizant of that and encourage you to feel free to ask the questions. Feel free to ask us where we're at. So that was a quick update on the growth side of things. As we talked about last time too, we're seeing a large disparity in one area of the market versus another area of the market. So I thought I'd show another quick update as far as where we're at with that. So in this chart here, we can see, I actually have up top companies that are driving some of the growth index. So we have up at the very top, we have Amazon up 61% year to date. And then we have both Apple and Microsoft up about 30% year to date. So that's driving the NASDAQ, as I mentioned, up about 15%. But then we have the S&P 500 down here, almost down 2% at this point, and small caps still down about 20%. So there's still that huge disparity between the sizes of companies and the types of companies that are really driving growth. So just thought I'd touch on that for a moment here. The next item I want to talk about today is the Consumer Price Index. So the good news is we're continuing to see a little bit of growth in the consumer price index. And in Bloomberg, there was an article that talked about how we actually had in June the largest increase in CPI during a singular month since 2012. And much of that was driven by gasoline. So there was a big jump up in gasoline prices by about 12%, which is still down about 23% on a year-over-year basis. But in this particular month, it helped to really boost CPI for the month. Things like groceries are up about 5.6% on a year-over-year basis versus this time last year. But then we have other things that continue to slow down the inflation. So some different service sectors like shelter are slowing down, rent payments, things along those lines. But we are seeing, as the economy has started to open up in June, that has really helped to feed into some moderate increases and it's helped to stabilize some prices. So presently, the consumer price index is up about 0.7%, so just shy of 1%. It's come down, going into this in the beginning of the year, it was around 2.4%. So it's definitely come down, but we're seeing a little bit of growth. But it confirms that with the high unemployment and the excess goods that are out there, and consumers are not necessarily consuming as much as they were before, that has definitely led to a disinflationary environment, not to be confused with deflation. So disinflation is a temporary slowdown of inflation versus deflation, a general decrease in prices. So we're in a disinflationary environment where inflation is slowing down, but it is still present. So just to kind of touch base on where we stand there, I think that's always helpful to understand how that is occurring within our economy. And then finally, the last thing I wanted to touch on today, this comes from an article in CNBC. The number of data breaches is actually down 33% year to date. So this is a good news article. I was happy to hear this. I know at the beginning of this pandemic, I had actually put together a video and had referenced in there, be careful with your data. Be aware of cybersecurity attacks during this time because everybody's working from different locations and it's very easy to just say, I just need to get it done. I'm just going to send out whatever piece of information electronically. We'll touch back on a couple of those tips in a minute for protecting yourself. But just to touch on this article, I thought that it was interesting. So they reported 540 companies this year have had data breaches, which is very unfortunate. But it's down 33% from this time last year. And the number of consumers impacted is actually down 66%. So that's huge. That's fantastic news. I don't know if it'll continue to go in that direction. It would be nice if we continued on a downward trend, but I'm not sure that that's necessarily going to happen because there are a lot of people working hard to access our data. But what they were attributing some of those decreases in are companies being extra careful, being hyper aware of potential data breach activities and making sure that their teams are hyper aware of different scams that are out there, phishing scams that are out there, or other emails or any other type of cybersecurity attacks. As teams have moved to a remote environment, I think companies have been hypersensitive to how that data is transferring and making sure to stay on top of that. And then also, a lot of data breaches happen internally. And so if the employees that unfortunately might have been prone to breach data internally, they might not have that access right now. So that's good news too. All right, so along those lines, since we're talking about it, just wanted to remind everybody, please continue for your own self to be vigilant with your private information. Please do not email out any private information that is not protected. So if you're sending it via a secure portal, or at the very least password protected, that goes for any account numbers, social security numbers, any personal ID. Make sure that you're protecting it before you're sending it, and make sure you know who you're sending it to and why. That's kind of a silly thing perhaps to say, but if you get or even if you get a phone call and somebody asks for your information, please do not give it to them unless you are 100% certain that you know who they are and why they need it. And if there's any question at all, hang up the phone and go through the back way of contacting that organization or that company, just to make sure that you get to the right spot and you can confirm that that information is needed. And also, I'm going to say two other things. One, please pause before you click on any type of email or anything that says, confirm your information here, confirm your account, details here. Please pause and pick up the phone instead. And then finally, speaking of the phone, just a reminder, the IRS does not call you at home. Nobody should be calling about your taxes at home unless it's your accountant and you know them. So once again, if you receive any type of threatening phone calls at home, please pause and remember that the IRS will not reach out that way. So thank you so much for joining me today. And if you have any topics or questions or anything else that you would like us to cover, we're definitely happy to do so, and we would love to hear from you. So until next week, enjoy some great sunshine, and we'll talk to you soon.